In today's video, I'm going to be sharing about my first investment outside of my 401k, the investment that got me started on building up these portfolios for early retirement, investing for my daughter. Apple stock, like so many companies and indices, has hit a record high of $237.50 to end the month of November 2024. So, as we went into lockdown back in March of 2020, I was opening up accounts. I opened up one at M1 and on Webull, and I got started investing. Apple is one of my first investments that I really put focus into building out. There's been a stock split since I first started investing back to March 20th of 2020. Over the last 5 years, the stock price is up 255%. So, why did I choose Apple? How it performed and what I've learned along the way are some things that we're going to touch on in today's video. So, I'm glad I started investing outside of my 401k and having additional investments because I felt the need to have more financial stability and not be as reliant upon corporate America for my potential for earning income and building wealth, especially after being laid off more than once. But it was a difficult time to get started because I was, again, fearful of being laid off because of going into lockdown and just not knowing what to expect for the future. So I was holding on to my cash because I felt like this is a time to have that money reserved in case anything was to happen, any interruptions with my pay, getting laid off, whatever. I just felt like it was a time to hold on to cash. I didn't know that there potentially would be stimulus and assistance and things like that going on. I was just going slow about getting started in my investments. So at that time, I was already watching Keenan Grace's stock market videos on YouTube, and I think I was already part of the Discord. So I was getting information and hearing about Apple being a good long term hold. In addition to that, I chose Apple because of their strong fundamentals and the brand loyalty that even I have. They've grown in their services like Apple Music and the Apple Store. I have my Apple Watch on my wrist right now. They are a global leader when it comes to the tech industry. So Apple is still growing up until today. They have delivered solid returns. There is strong demand for the iPhone, especially when it comes to the international markets. They've been expanding into different services and subscriptions, now being a significant part of Apple's revenue. Apple's ecosystem keeps their users loyal and spending. I'll tell you, lately, I've been editing my videos on the Mac Mini. I can airdrop to my phone, getting my alerts all day long about the price movement of Bitcoin and all of these different things because I have this network that works together. And Apple is keeping their edge by getting into the financial services with Apple Pay and the Apple Card. Let's take a look at the price forecast for Apple stock. And I'll tell you, they show that there is continued investor confidence. So, taking a look in my Moomoo investing app, I see that 82.76% of the analysts currently rate Apple as a buy. There is an average price target of about $250 with a high of 300. And a few analysts ratings from late November, we have Wedbush at $300, Citi at $255, Morgan Stanley at $273, and Bernstein at $240. So it's looking like Apple is on its way to moving to $250 in 2025. And Apple is currently the largest American company when it comes to market cap. Apple, Nvidia, and Microsoft have been the leaders trading places for that number one spot. So when it comes to my portfolio, staying invested has paid off. Let me share my current results that I've built up over these last few years. I have 57.75 shares. My average price is $152.63. I've gained $4,898 on this position. I am up 55.57%. I'm glad that I decided to not just be a consumer, but to be an investor when it comes to Apple. After my initial investments into Apple in that first year or so, I took a long break from investing when I had about $120 price average because I didn't want to mess it up. But I should have thought of the big picture. But as I said, I was new to investing outside of my 401k. And during that time, it gave me a chance to focus on other investments like Amazon and Google. And let me also talk a little bit about embracing dollar cost averaging. I was at times when I first started investing concerned about the stock price, wanting to buy stocks that were lower priced that I could buy a full share of. But I'm glad that I got over that because I could see the potential in certain investments and I wanted them in my portfolio. So I had to say, okay, it's okay to go about this 5, 10, 20, $50 at a time if I cannot afford to buy a full share. And that has allowed me to have those investments in my portfolio for several years now that I would not have been able to get started with a full share because at the time when I was starting, the stock prices were very high and they had not had a recent stock split. It seems that Apple has embraced that all along, making sure to have those splits on a regular basis and keep their stock price on the lower end. But at the time when I was starting to build my portfolios, Bitcoin was tens of thousands of dollars. Tesla was $988 the first time I invested. Amazon was $3,391. Google was 2,900. Once I embraced dollar cost averaging, none of that mattered. I just went about being consistent and investing into those positions on a regular basis, just like I did with my Apple stock. Now, those other positions, I have not gotten them all to 50 shares, obviously, much less when it comes to Bitcoin. But I've been able to focus and build up those positions to about 20 to 25 shares each so far, and I'm still going. So I'm glad that I've decided to invest outside of my 401k for the flexibility and control that it gives me on my journey to build wealth and have more financial stability as I strive for full financial freedom. For now, Apple will be remaining a part of my long term portfolio, along with my other blue chip stocks and ETF that have demonstrated the type of stability that I am looking for. So, if you're not already, get started investing. If you don't want to pick individual companies like Apple, you can pick an ETF, an exchange traded fund like a VTI or VOO that will give you exposure to the top 500 companies in the US or all of the companies in the US. And if you invest into a fund that is weighted by market cap, you'll be getting exposure to these top name companies like Apple, Nvidia, Microsoft, Amazon, Google, and Meta. I hope you enjoyed this video. What was your first investment? If it was your 401k, put that down. But if you've decided to invest on your own, share the stock or funds that got you started and has kept you motivated on your journey. If you're ready to open a new account, check out my referral links. They'll be in the description and pinned in the comments. And you can also support the channel by joining channel membership. Thanks for watching. Okay, bye.